We've never ever seen a price decline like this in history of Canadian real estate going back to 1970. The real estate cheerleading has begun, but is there any merit to this cheerleading? Well, that's what we're going to discuss in today's video. So we're going to go over to an updated article from Wolf Street, and this is really interesting because it really dives through the data, and what we want to go through is in fact the data of what's going on. Now this is for February. I want to be clear here. I wanted to get this video out ASAP because we'll have the March update that comes as well, and then we can check that and we can keep passing through this data as it comes out, because Wolf Street really reports this with no industry bias like realtors, mortgage brokers. Okay, so let's take a look. Year over year, home prices plunged by the most on record as the seasonal uptick in prices was far smaller than a year ago. So that doesn't sound as rosy as you're hearing from the real estate industry, does it? Which is that all these over asking price offers are back, people are lining up at open houses to buy these houses, and that might be happening, but that might be happening for other reasons, like realtors pricing lower than the property is actually worth in order to get people's FOMO and emotions going. And that's really what they have tried to perfect during the pandemic, is exploiting people's emotions to get them to overpay for a house and to maximize the commission checks that they get, which is really sad for the industry. And I think people are starting to see this as now, and there's a real distrust in the industry. This is the beginning of the spring selling season. So let's see. Home sales in Canada rose by 2.3% in February from January, but that was less of an uptick than it should have been. And on a year-over-year basis, sales plunged 40% compared to the 37% plunge in January. Prices of single-family houses in February rose 1.2%, but that was puny compared to the year-ago month-over-month jump of 4.8%. So it's basically showing you that this is a time of year where typically home prices would go up, and if there was any chance, even in a weak market, home prices would go up right now. And typically this is the worst time to buy. If you look at historical price charts, buying in spring season is the worst time to buy a house. Buying a house is best to buy it in fall or winter, like into the months of December, because people selling in December typically are desperate to sell. They're selling for a reason, so that's a great month to buy, but there's less inventory. If you're after that perfect home, you'd be looking at fall, where there's a lot of inventory but you've got declining buyers. Right now you have tight inventory and you have the uptick in buyers that is coming from the spring, and really it's not till later that we see that inventory really start to hit the market. There's sort of a lag factor, and the same comes in the fall, but that works in your favor, so remember that. So year over year, prices plunged by 18.5%, the largest drop in the data according to the Canada Home Price Benchmark Index for the single family houses by the Canadian Real Estate Association. My gosh, that is a mouthful. Since the peak last March, the index has plunged 19.1%. So if you look at that right there, you can really see it, can't you? How even the previous corrections that have happened, this is way worse than that. And look at how extreme it's gone from being extremely high right here to going extremely low. So what that tells you is really the pattern of emotions that we saw, and the pattern of emotions that you typically see at the end of a bubble cycle, which is you have that last leg up, which is very extreme. Nobody can explain it, and everybody is saying, well, that's it. You know, prices are just going to go up from now, because nobody can make any sense of it. And even though a lot of the time everybody's got an excuse for why a bubble goes up, I've heard them all. Different countries, different locations, you hear different stories of why prices are going to go up. And I find that always hilarious. You know, one of the big ones in Canada is always immigration, obviously. But we've seen over the past year, population growth, absolutely massive, record population growth. And what did we see? Record home price declines. So what does that tell you about immigration, guys? Does that tell you that immigration is causing housing prices to go up? No, it doesn't. It's interest rates, it's the debt levels that people have in Canada, and it's really just a bubble funded by debt, okay? It's funded by debt. Debt slavery is what the government wants you to be in. So in terms of Canadian dollars, the single family home price index for Canada ticked up by $8,900 in February from January, but that was puny compared to the $44,000 increase a year ago. And so year over year, the benchmark price plunged by a record 18.5% to $781,300, rolling the price back to July 2021. So that means that there is a lot of people that are underwater. If you add on realtor costs, closing costs, you're talking early 2021 we're going back to in terms of prices in a lot of markets. That is really, really bad for the future, because if there is anybody that needs to sell because they lose a job or they lose some income, they're absolutely screwed, guys. They cannot sell because they're underwater and upside down. And on top of that, you have these fixed payment variable rate mortgages which were booming during this massive rise that we saw. So what does that tell you about what is going to happen? I don't think it tells you good things. Really insane amounts of price declines that we've seen over the past year, and record price decline. That's what I want to highlight, and this has been a record bubble, as you guys know. So obviously the cheerleading that we've seen is really cheerleading over $9,000, and it's really just to exploit your emotions. Like I said, they know how to exploit your emotions, and they're going to try and do that. So here's the MLS price index for single family, and this is Canada, and you can see it's just barely an uptick. I mean, look at it. It looks like nothing on the chart. Hangover after the free money binge, this most ridiculous home price bubble was triggered by the most ridiculous money printing binge and interest rate repression globally and in Canada. But now consumer price inflation is tearing up this strategy, as it ultimately always does. And the Bank of Canada has now raised its main policy rate by 425 basis points to 4.5%, and its quantitative tightening is in full swing. Consequently, mortgage rates have risen from the levels a year ago. So that is really, really interesting, isn't it? Because when you think about the money printing that has come in terms of the quantitative easing and it's really, that's not so much of an inflationary thing, even though the mainstream media would lead you to believe that it is. What is the main thing is the government deficit spending, because that ultimately is money printing, especially when the Bank of Canada is buying that debt, which they were during 2020 and 2021, so they could run these unbelievably large deficits. But essentially, when any credit has been created, that money is inflationary, whether that is credit in the housing market, the government's creating that credit, or it's the business that you own or work for that is taking out loans. All of that is new money, new liquidity into the system, and all of that is inflationary. The thing is, when these asset prices bubble, what happens? Well, a lot of this debt has to be destroyed, and because this debt typically goes into one of two asset classes, either the stock market or the real estate market, you actually see asset price deflation happen, and we're already starting to see that. And you know, we haven't even tacked on the inflation numbers. You're talking about real price declines over 22-23% year over year. That's absolutely insane. We've had a tiny uptick in sales and a minute uptick in price, and the real estate industry is roaring and going crazy. And no doubt I would expect actually this to continue, because it's going to really get people emotional. There's a lot of people that are holding off on the sidelines, and because you've seen rates that have come down, at least longer term rates, there were people that were legitimately just waiting for rates to come down, and now they're going to take advantage of that and go in. Most people aren't waiting for a crash or anything like that. It's definitely easy to wait whilst housing prices are going down, especially if you're waiting for like lower rates, for example. So a lot of people, as soon as they see any sign that the housing market is going up, their emotions come rushing back, and they come rushing back into the market. market. And it basically creates this bull trap, which we're seeing play out. And I've predicted for over a year nearly that this is going to happen, and it's happening right now. And you can really see that, guys, in the psychology. That's what you really have to look at. The emotions of people who are going into the market right now, and all the stirring that the real estate industry is doing, and the cheerleading. And that's not all realtors, but it's a lot of them, unfortunately. So it's absolutely insane, guys. I mean, this is the bubble chart. And if you really look at this, guys, we've never ever seen a price decline like this in history of Canadian real estate going back to 1970. So we're talking 53 years, and we have not seen a price correction like that. So it is really historic what is happening right now, and you really just have to be smart about what you're doing. I'm not saying just don't buy a house or whatever. You got to check its rent range. You've got to do a market analysis. You've got to see what it really means. But I've looked at most markets across Canada, and it makes zero sense to buy. And heading into a recession, if you think that's going to happen, I think we're already in a recession, heading into a depression, then it's even more risky, guys. Just be safe out there. I know there's a lot of FOMO, there's a lot of emotions, and I just don't want people to get took advantage of. And that's really what I just don't want to happen. Just make sure you are thinking things through. If you are rushing things, then it's likely that you're suffering from FOMO. Slow down, do a market analysis. You need to tally up the positives and the negatives of buying right now, and then look through them, see which ones rank highest for you, and then make a decision based off that. If you do it like that, then it's really hard to suffer from FOMO. It's really when you're rushing in, you're emotional about the purchase, that's when you're going to massively screw up. And when you do no homework, no research, no market analysis. So anyway, we're going to continue to monitor this and see what happens, and we'll get that March report, which will come soon enough, and then we can take a look at that and see what is going on in the housing market. So anyway, I want to thank you so much for watching. If you've enjoyed this, you might like either of these videos here. Thank you so much for watching. I will speak to you down below in the comments, and I'll see you on the next video.